And good afternoon, everybody. Thank you for joining today's Retirement Genius Brainstorm webinar. I'm your host, Chris Oresis, the president of Retirement Genius, and today we're going to talk about executing a long-term care game plan, how to recognize the need for care, understand the differences between the various forms of care, and the options for how to pay for care. These are the three critical ingredients that make up a long-term care game plan. Retirement Genius is an information and resource platform with the goal to help people achieve a well-balanced retirement. We focus on financial resources, health and long-term care solutions, and lifestyle, bringing those together so that people can create that well-balanced retirement and retire like a genius. So preparing for long-term care in the future is something that most people are avoiding. They confuse much of what it takes to be prepared for long-term care. It's something people are delaying, and because the majority of them think it's never going to happen to them. But the reality is 70% of people over the age of 65 are going to need some form of long-term care in their lifetime. And who's paying for care? Well, cost of care is expensive. This is the current average cost of care in this country for home care services, assisted living services, and skilled nursing facility services, a nursing home, either a semi-private room or a private room. Funding sources spread across entitlement programs such as Medicaid, Medicare, and then private pay, your out-of-pocket, and what's covered by long-term care insurance. When you look at the safety net structure of what's in this country today, we spend over $4 trillion a year at this point and growing on healthcare in the United States. Medicare, Medicaid, out-of-pocket, and private health insurance as a percentage I shared with you. But in dollar terms, here's how $4 trillion a year breaks out. You have 64 million people who are enrolled in Medicare, kind of a split across the traditional Medicare and now Medicare Advantage, Medicare Part C, which you see a lot of TV commercials out there. That is a growing option administered by private health insurance companies. And then there's 88 million people that are enrolled in Medicaid. And the alarming statistic about that, which is very telling about what's going on in this country when it comes to paying for long-term care, is 34% of the Medicaid population, of the Medicaid dollars, are being eaten by 5.5% of the Medicaid population on long-term care related expenses. A lot of people look at Medicaid as their first option for how they're going to pay for long-term care in the future if it's going to happen to them. But what they end up coming to unfortunately realize is it's designed to be the payer of last resort, covering people who are impoverished. And when you get onto Medicaid, it means you're now a ward of the state. You're no longer in control of your care decisions. You are subject to what the government says you qualify for in your regional area. If you're private pay, you're still in control. And that's a lot of what we're going to talk about today. So let's start with the first part of the long-term care journey. And really, long-term care is a journey. It's often a journey that is traveled not alone, but by oftentimes the entire family or many members of a family. Long-term care is unique in that once somebody in the family is going down this path and needing it, it will involve much of the family for the rest of that journey. And it starts with recognizing the need for care, because people not only are avoiding discussing the topic, but many people fail to also recognize the signs that it's time for long-term care needs. And even further confusing the situation is that people oftentimes are in denial about their own need for care or the need for a loved one. As loss of ADLs start happening, some people don't even realize it's happening to them or a loved one, and they start to get drawn into actually becoming a caregiver. People will find themselves put in the position where they are a caregiver and they don't even recognize that the need for some form of professional care is now at hand, and they're providing the care, thinking it's just part of their lifestyle. It's just become part of what they're doing. And actually, they play the role of a full-time or a part-time caregiver that if you were hiring somebody to provide those same services, you'd be paying some real money for the support that most family members end up providing for free. So the first sign you want to be looking for to recognize there's a need for care, and there's three areas, three signs you want to be looking for. First, physical deterioration, things like rapid weight loss, a loss of mobility, and becoming harder for somebody to get up out of their chair, to get around. Their strength or endurance is really diminished. And there could also be physical signs of injury, bruises, cuts, somebody falls and breaks a bone. These signs of physical deterioration are an important clue that the need for long-term care may be close or already have arrived. Then there's cognitive deterioration, that loss of memory, confusion. You don't want to blow off these things as senior moments. Now, we all have shared the experience of walking into a room and forgetting what it was you went in there to do or get. That's a lot different than walking into a room and not knowing where you are. When people are mixing up who people are, timelines, where they live now versus where they used to live, you'll see also it expressed in the form of temper tantrums, frustration, outbursts can occur, all signs that cognitive deterioration may be coming much more than just the normal course of a little bit of slowing down as aging occurs. You've got to look for the difference between normal stages of physical and mental slowing down versus real deterioration that is creating health and safety issues. And then also look for environmental deterioration. Look around the home. Is it messy, disheveled? Is there signs of damage around the home? Are things out of place? Is also someone's dress, how they dress, and what's in the fridge. Look around for those physical clues that may be showing themselves and could be very visible to somebody, particularly if you haven't seen a loved one for a while and you're visiting them at home. For a lot of people, COVID has created periods of extended isolation and separation from family members. Getting back together, that's when you really got a chance. If you haven't seen somebody in 6 months, a year, and you now are seeing them with a fresh set of eyes, look for the physical deterioration, look for that cognitive deterioration, and look for those environmental signs of deterioration. These are all clues that the need for long-term care may be at hand. And across these three areas, it boils down to for professional caregivers, for qualifying for triggering a long-term care insurance policy, other forms of care, and funding, it's activities of daily living. Make sure you're able to understand and remember what the 5 key ADLs are: the ability to dress independently, to be able to feed themselves independently, bathing and showering independently, being able to conduct their own personal hygiene, and being able to go to the bathroom, toileting. If any of these are starting to slip, 2 or more losses of these ADLs become triggers for a long-term care insurance policy, for moving forward, potentially to qualify for Medicaid, and for another of other financial and care-related factors to long-term care services. So this is where the clues translate into actual tangible markers that are used to trigger many elements of the long-term care journey, moving forward into now having real long-term care services and the elements of paying for it. So when you get to this point, let's talk about understanding the different types of care, because senior living and long-term care is a very complicated mix of care providers, care environments, eligibility requirements, people's personal preferences, and then financial requirements. It's depending on what you want, what you qualify for. There's going to be a whole host of differences as to what it takes to qualify to access that kind of care, and then what it is, what you'll be eligible for to pay for it. And people take this for granted. They sort of have a vague understanding of, nursing homes or long-term care, but they really don't understand all the options and how to navigate what I call the long-term care industrial complex. There's a number of different elements to care and care providers that people just sort of lump together in one catch-all concept in their minds of nursing homes or long-term care. But once people are actually engaged in this process, and unfortunately, when they are, usually, as we've said, and we continue to warn people, they're blowing this off. They're not thinking about it. They're not preparing for it. They're assuming it's not going to happen to them. And then when it does, all of a sudden, they and their family are thrown into a situation where they've got to figure all of this out almost overnight, and it can be overwhelming. Trying to understand the differences between the types of care, and how to pay for it all. Should it be at home? Should it be in a care facility? How do you pay for that? What do you qualify for? What do you not qualify for? If all of a sudden overnight you've got 24, 48 hours to figure this whole thing out, it's just so much for people to take on, but it can be broken down into some reasonably understandable elements, starting with, the differences between what is skilled care that's received at home or in a nursing home. What are the differences between memory care and assisted living, nursing home care? What are the differences between hospice and palliative care? Understanding these differences and sort of how they oftentimes will break out in a sequence across the long-term care journey. Oftentimes it's a progression that is going to flow with the care needs of the individual. So stage one oftentimes is home care. This is often where this is going to begin. And it can be non-medical companion care where you're getting assistance with activities of daily living, but you're not necessarily yet receiving skilled care. Now, you can receive either non-medical or skilled private duty care if your care needs have elevated to that. So home care, if you can afford it, you could run the entire healthcare long-term care journey at home. Most people can't and don't. They'll oftentimes start at more custodial companion care level of home care as their journey begins, which oftentimes can lead to stage 2 assisted living. And this is where people need a assistance with ADLs, and they need to move into an environment that is more focused and organized to meet their needs than they're going to receive at home. They're going to get meals and social engagement. They're oftentimes in assisted living, you have a private apartment, you have assistance with mobility, and there'll be a personal care plan in place to meet the needs of that individual. But if their care needs continue to escalate as their condition deteriorates, for some people, they might bring home care into an assisted living environment to stay in that environment as long as possible. But if either their financial means or their care needs get to a point that they have gotten past what assisted living as an environment can provide to them, you would oftentimes, either because of a cognitive need, move towards a memory care facility. Assisted living and oftentimes skilled nursing homes are not set up to deal with cognitive decline and the very unique needs brought on from dementia and Alzheimer's. So for a lot of people, assisted living is or home care, they're either going to move into a memory care environment if cognitive challenges are what they're dealing with. And that's going to provide 24/7 security, specific safety measures. The staff is specifically trained to deal with the needs of people with declining cognitive ability. They're specially designed floor plans, programs specifically put together, lighting specifically put together to try and keep people in a cognitive challenged situation, calm, feeling that they're not isolated in an environment that is not conducive to their needs. And for the family, this is critical to see that those specific needs are being addressed. Of course, the next stage of care beyond assisted living or memory care is skilled care, which can be delivered at home or in a nursing home. This is where you have loss of mobility, advanced declines cognitively and physically, and a need for daily medical treatments and therapy. You have licensed medical providers particularly in a nursing home, in licensed care facilities. So nursing homes tend to be the most common place that skilled nursing care is provided. It can be provided at home, but the vast majority of people who are receiving care at this point are receiving it in a nursing home. And then as you get to the final stage of care needs, hospice and palliative care comes into account. This is where you get to advanced treatments with palliative care, advanced disease treatments, or end-of-life care with hospice. So if somebody's struggling with cancer, struggling with a advanced and deteriorating disease condition, they're going to receive palliative care. If somebody is getting to end-of-life stage, they're going to receive hospice care. So understanding and recognizing the need for care is a critical element of this. Understanding the different forms of care is a critical element of this. But at the end of the day, long-term care is a very expensive proposition, as we've pointed out. And that's where we have to start focusing on how do you pay for care? Because the cost of care and its impact on the family is, again, underestimated by most people. There's this general feeling, and we've seen the stats, that the majority of people think if care does ever happen to them, it gets paid for, somehow it gets covered, but for the most part, they're thinking they're not even going to need it anyway. But when the reality hits, how do people pay for long-term care? Well, the payment options are divided really into two buckets. You have entitlements, government funded, and private pay, which is out of pocket or other means for the individual to pay for their costs without entitlements. The two primary entitlements are Medicare and Medicaid. But let's be clear, Medicare does not pay for long-term care expenses. It will pay for short-term rehabilitation care in either a home-based or a skilled nursing environment. And again, the vast majority of skilled rehab care provided and covered by Medicare, which will only cover it for 100 days. The first 20 is full care, is full coverage. The next 80 is 80-20 coinsurance coverage, 20% being paid for by the individual. That's in a skilled rehab facility, which is oftentimes a nursing home. Medicaid is you qualify for Medicaid based on your medical need and your financial means. You need to be below the poverty level. There are asset and income limitations, care need requirements, 2 ADLs or more qualify for Medicaid. And then once you're on Medicaid, the vast majority of people will receive their care in a nursing home. But let's talk about private pay for a second. Private pay kind of breaks across two areas, either people who have long-term care insurance or policies and annuities with long-term care riders, or people who self-insure. You're paying with income, you're paying with assets, you're paying out of pocket for yourself. Funding home care is primarily private pay. There can be some Medicare and Medicaid dollars, but it's very hard to qualify for home care provided, paid for by entitlements. Assisted living, again, vast majority of it is paid for private pay. Memory care, the vast majority of that is paid for private pay. Nursing homes, primarily paid for by Medicaid, and hospice and palliative is primarily paid for by Medicare. So let's talk about some private pay options that people can be using, and you as advisors can be working with and using to help your clients address their need to pay for care beyond long-term care insurance. Because what I'm focusing on here is people with an immediate need, or people who, for the most part, are too far down the road in terms of their age to have long-term care insurance, or maybe they have long-term care insurance, but they're looking at how they can have additional resources for when the time comes for needing care. And one option that we've talked about in the past is the PPA annuity. The Pension Protection Act created a specific annuity allowing for a tax-free rollover of funds into an annuity with long-term care features. To qualify for the PPA annuity, it's a 5 health question phone interview. All must be answered no, as well as a cognitive ability check. So you're going to fill out a application. There's going to be a phone interview. If you qualify, money put into the PPA annuity will function as a normal annuity until you get to the point that you need care. With 2 ADLs or more, you will trigger a 3x increase in the amount of money you've put into the annuity to be used to pay for long-term care, and those dollars in the annuity being paid towards long-term care are all tax-free. There's also the medically underwritten SPIA. This is an immediate annuity that is medically underwritten, which is designed to provide a higher monthly income for people who have impairments, suffering loss of ADLs, and are in need of long-term care supports and services, that want to make sure they've got a guaranteed income stream for the rest of their life. Many people worry that they will run out of money while they're receiving care, and then it will be very disruptive to their care experience, the environment that they're receiving care in. With the medically underwritten SPIA, you're actually, because of your impairments, you will get more value from this SPIA than a non-underwritten annuity. The age range to qualify is between 70 and 95, and the minimum premium is $50,000 to establish a medically underwritten SPIA to use for your long-term care needs. Then there's the Medicaid compliant annuity. This is a Medicaid compliant spend down tool that's going to put money into a short-term SPIA that will continue providing income for the spouse that's not entering institutional care. So if you are a couple, a married couple, one needs to go onto Medicaid and go into care, the other does not. You can preserve income for the non-Medicaid spouse by creating an irrevocable, non-assignable annuity that is set up on an actuarial basis to meet basically the time frame that is projected to be the remaining life expectancy of the spouse who is going on to Medicaid and receiving care. But the state is set up as a beneficiary, either the primary or the contingent beneficiary, for any remaining funds in that annuity past the point that the person, that the spouse, if they're living past the point that the funds were designed to pay out in the time frame of that annuity. There's also the LTC life settlement. This goes back to 2007. It's available in all 50 states. It's a life settlement specifically designed to address an immediate need for care. It's been in the market for a good 15 years. It's something that we've done a lot of work on to create a focused life settlement option for people who own a life insurance policy to cash in that policy while they're still alive, and then use those funds to pay for any form of care that they want. There's tax advantages for people with immediate care needs. If there's 2 ADLs or more, the funds from the LTC life settlement are tax-free. And then there's the option to put those funds into an HSA style account that will protect the funds and administer it as a Medicaid qualified spend down on a monthly basis, paid directly to any form of care the person wants at whatever amount they need. There's the home equity conversion mortgage, a reverse mortgage, or a HECM. These are loans that are secured against the home value and equity of a person's primary residence. If they are age 62 or above, they can qualify. It's an FHA insured non-recourse loan, which means that if the person dies and the value of their home is dropped to less than the loan they took out, they are not responsible for paying that difference out of the final liquidation of their property. The options to take a reverse mortgage come in the form of either taking a lump sum, establishing a monthly income, or establishing a line of credit that can be drawn down off of on an as-needed basis. The advantages to a reverse mortgage, particularly for people that need care and are trying to manage their finances, is when you take out the money, you're not responsible for making monthly payments back against the loan. You will accrue interest over the time of having the loan, and then it'll be liquidated and paid back when you exit the home. You have up to 12 months from the time you leave a home to sell it and pay back that loan in full plus accrued interest. But you never had to reach into your pocket the entire time that you were living in the home and benefiting from the reverse mortgage funds. There's also the Veterans Aid and Attendance benefit, an important benefit, particularly to know for your clients who are veterans. This is a monthly long-term care benefit that's going to be paid to veterans of an active period of war and or to their spouse. And this can be a very important part of the puzzle. This is an important piece that can be put together to help somebody afford the cost of care, because the veteran who qualifies on their own, let's say just by themselves, they're going to receive $2,050. The veteran and spouse together, if they're both needing care, $2,431 a month. And a surviving spouse, the veteran themselves is no longer alive, but their spouse is, the surviving spouse can qualify for this benefit as well. And they'll receive, as of this year, $1,318 a month. Another option to make sure you're aware of that's out there is the senior bridge loan. This is a line of credit that's secured against a home specifically to pay for long-term care expenses, and it's paid directly to the care provider. So people will use this as an option to bridge their care needs, their financial needs, until they can sell their home or access some other resources. The payments are made directly to whatever form of care the person chooses, and they are only responsible for making interest payments on the loan for the first 60 months. Usually somebody who uses a senior bridge loan would have paid this back but before 60 months had expired, because of the ability to sell their home, access other resources to pay for their care needs. So in conclusion, here's the reality and here are the solutions. The US is an aging population. We have limited financial safety nets. There's way too much pressure on Medicare, Medicaid, taxpayers, and it's getting harder and harder to meet the needs of an aging population, particularly one now that's having to confront new challenges to aging. There's new things going on in this world that are creating pressure on seniors that many haven't seen before. And that's just complicating the limited financial resources available by the government to give everybody what they need. People, unfortunately, are underestimating the costs of retirement and long-term care, and they are not adequately preparing for their future. But the use of alternative financial solutions for seniors, such things as annuities, long-term care life settlements, reverse mortgages, VA benefits, senior bridge loans, have all become very mainstream and are growing in popularity and use with aging baby boomers who are looking for solutions and resources. And you, as agents and advisors, are uniquely positioned to be the problem solvers that can bring these solutions to them versus trying to just sell products. What seniors, what families, seniors, what people don't want are advisors who have an agenda of just trying to sell them a product, whether it's a long-term care insurance policy or an annuity or one of these things. The real success as an advisor is in having the ability to bring these together in a cohesive way to create solutions to meet the needs that are unique for every person who is confronting the challenges of aging and declining health. These tools are at your disposal. You're among the best people positioned to be using them. And this is how you will grow your practice, bring more revenue into your practice by bringing more solutions to your clients. So thank you for joining us today. I invite you to get your free copy of the Retirement Genius Tip Sheet, 7 Strategies to Avoid LTC Bankruptcy, where we cover all this and more in more detail. Give us a call at 888-627-3735, and we'll make sure you get a copy of that. And for anybody who registered for today's webinar, we'll get you also a copy of the recording of today's webinar as well. I'm Chris Oresis, president of Retirement Genius. I invite you to join us at our consumer website, retirementgenius.com. But if you want more information, want to work with us, want to work with these tools, come to advisors.retirementgenius.com. Simple sign up to get into the system, and then we'll reach out and get you set up with tools and support so that you can use these kinds of solutions, this kind of information to help your clients retire like a genius. We look forward to talking to you again soon. Encourage you, as always, to visit our podcast, wherever you get your podcast. Listen to Retirement Genius. You'll find us there, and give us a call, reach out. We look forward to talking to you soon and working with you to help you grow your business and find solutions for your clients' needs.